As we approach this Thursday, the potential D-Day here on tariffs on Chinese goods, can this risk aversion continue to drag on in September?
Well, yes, it seems to be the case. I mean, certainly we're seeing that across some of the risk markets. On the flip side, we have the dollar still rising from the ashes, year to date up 10%, having retraced half of it last year's losses. So this is, on the one hand, a dollar positive, but of course the EM flows related.
Right. I want to bring up a chart here just for our viewers to see, which we've seen these kind of at odds, these markets, what we're seeing in this part of the world and the U.S. Analysts have cut their 2018 estimates for MSCI Asia Pacific, but then you see this divergence here with the S&P actually, and that is actually diverging, and people are racing to try to raise their targets when it comes to U.S. stocks as well. How do you view this divergence at the time being? Do you think that this is sustainable?
For the meantime, it will likely be. I mean, the dollar has potentially peaked as of last month, completing that 50% retracement. I think looking at the correlations, they've held strong so far. But the question is which one will likely turn first. 2 years have been leading with the Fed actually raising hikes, and we're expecting 2 more rate hikes to come. But I think for the meantime, between the two, the dollar's likely to stay strong with a long-term technical picture, which has been up for over a decade now.
Right. And, you know, in terms of EM, I mean, it's still that question of further contagion. If you take a look at Argentina and Turkey and what we've seen last week, do you think that these are still just EM-specific stories, or do you think that it could actually spread further?
Technically, it looks like it could spread further. I mean, I know the fundamentals and various experts are saying not likely for now, but from a trend momentum perspective, these trends have put their major high in, and it's looking like a very exhaustive move from where we're actually going to likely get deep corrections, and that's on Turkey, Brazil, and Argentina as a case in point.
All right, Ron, deep corrections there. It's really interesting because we're already seeing deep losses when it comes to both currencies as well as stocks in EM. Hop into the Bloomberg terminal. I want to show you as well as our viewers this GTB terminal library chart here. In white is the MXCF index, and then in blue is the MXCF currency index, just right here at the bottom. I mean, I know that some countries are idiosyncratic, but you know the baby is going out with the bathwater right now. In terms of what opportunities you see, are there any right now, or is it just best to stay away?
Well, the best attractive trade at the moment is actually vol on the short-term side, potentially across developing markets which have not yet fully priced in the EM spillover. But in terms of the actual currency moves themselves, it's probably best to sit and wait as the markets are quite fast-moving at the moment.
All right. Yeah, one thing that we were just looking at today that Bloomberg News has been covering is the Indonesian rupiah dropping to its lowest in 20 years. I mean, it's interesting. When we were talking about Turkey, when we were talking about Argentina, for the most part, we weren't talking about contagion to Asia Pacific, but it seems here that it is finally going through. Is there any concern that this will continue forward for any other parts of Asia Pacific?
Well, at the moment, I mean, certainly the markets are showing just the volatility contagion, which is the one thing that does filter through market psychology. So we must sit and look at the equity markets, but at the moment, certainly currencies are leading the way, and that will likely spill over furthermore on the stock markets.